What's going on, everybody? It's your boy C-Zar, and we are talking about ZBCN Zebec today. It is the 17th day of December, and here we are sitting at about $0.0026 with 8 hours and 36 minutes left in the day. Hit that like button, subscribe if you want to see more content like this, and let's get into it. Bitcoin's pumping, Zebec's pumping, everything's probably green today. Let's see, maybe not everything. Not Onyx Coin, darn it. Or KTA, what's wrong? Only ZBCN. Only ZBCN out of these three like DeFi protocols. Anyways, here we are. $0.0026 right now, 8 hours, 35 minutes left in the day. If we're looking at this on the 1 hour time frame, let's start it off on the 1 hour time frame, and we will, of course, bust out the Bybit chart to check out the volume. We did diminish in volume at the lows here. We're building volume as we're moving up. We're not getting a whole lot of volume now, but I don't think that's necessarily a problem. I don't think we're at the point where we need volume now. Even if we don't have volume here, maybe we come back and then we retry later. Maybe we are about to break out. We're about to get that volume to come in. You know, with these lower highs, I guess at this point you would want to see volume. I guess you would. So the fact that we're not seeing volume is a little bit dicey, but it doesn't mean you have to pull back from here. The 1 hour RSI looks bullish. The stochastics look bullish. And the MACD looks bullish. I mean, you literally just bounced off your zero, and now you're building bullish momentum for your first hour. So I would assume this does continue. We have 34 minutes left in this hour. Let's see if that volume doesn't pick up as we continue. That'd be my expectation. If we continue moving higher and volume depletes as we move higher, we likely will, like if we move up higher and volume just depletes, whoops, that's not what I meant to do. If we move up higher and then volume depletes, why can't I do this right? Oh my goodness, man, come on. And volume depletes. Let me try this one more time, guys. If we move up higher and the volume depletes, we will move lower afterwards in a sharp fashion. That's all I'm trying to say, darn it. All right, now we can end the video. Looking like you do want to move higher, though. The indicators are suggesting that we want to move higher. If we look at the 4 hour time frame here, the RSI has broken out of its downtrend, right? We have lower highs and lower lows. Lower lows there, lower highs there. Bouncing off the 40. Looking good, man. I mean, honestly, the rejection off the 50 and then the bounce off the 40, that's a bullish signal. You did that here, boom, right? You did that here, but you didn't get back above the 50. Here you are above the 50. I think you look good, man, honestly. Stochastics definitely look good. The stochastics definitely do look good. And the MACD is sad, in all fairness. It is bearish overall. It's like there is bullish divergence, but there isn't. I don't know what to think of that. There was bullish divergence at the low for the stochastics and the RSI. The MACD is sad overall, but you are building bullish momentum. You know, here, maybe you, in this phase, you retrace to like these levels. You get your MACD to cross above the zero, you consolidate, whatever, and then you get your real run where you actually break out and you get your faster paced move. That'd be my assumption. We look at this on the daily time frame. We take the low to the high. You've hit your 786 for support. Now you're coming back up. You're right at the golden ratio. Not financial advice, not a financial advisor, but being that you are right here at the golden, oh, look at that. Was it like this yesterday? Okay, so this happened but before I made, or after I made my video yesterday. I'm glad this happened after, because if this happened and we saw this candle here, especially this, I would have been bearish to the 886. I'm just telling you right now, right here, this would have got me good. I would have been bearish to the 886. Maybe the fact that there wasn't that much volume would have been an implication there, but the fact that you rejected the 618 is not a good sign. However, the fact that you're back up here with a vengeance, this was a false move down. It absolutely was. Because look, you broke out of your upward structure. You moved down. You even had a little bit of volume, but not much. And you rejected the golden ratio directly. If you do my type of analysis, this would have got you. You would have been max bearish at the low here. And then probably wouldn't have gotten bullish until the last hour. It would have got me completely. So fortunately enough, here we are. I think it's obvious, like, if you're doing this kind of behavior, right? Like, this was the lie. So we went lower, right? Well, here, this was the lie. So we will go higher. Does that make sense? That's just the thought there. Rejecting the golden ratio once, bad. But coming back up, I doubt we stop here the second time. I was going to say we need to push through this level now, because if we don't, that could be really bad. But guess what? We've already done that once, and it was false. I'm I'm the utmost confident that right now we were pushing higher. Screw the volume, man. By the end of the day, Zebec will be higher. It will not be at this level. It will not be lower. It will be higher. Yeah, absolutely. Daily time frame, double bottom on the stochastics, bouncing off the oversold zone on the RSI, and the MACD. Well, unfortunately, you gave up what was pretty nice bullish divergence, but that's okay. You're still staving your, I think that's the right word, right? Staving, like with an ST, your bearish momentum. You're slowly shifting that bearish momentum away, and you actually have been doing this throughout your whole consolidation phase. You can see it here, right? I mean, it's not perfect. This is a lower low, but really in this grand scheme of things, you had lower lows here, you had lower lows here, you know, I mean, higher lows relative to this, but lower lows relative to themselves. But more or less since June, you've been getting closer and closer to what looks to be a giant shift in the momentum. You're going to see probably something of this magnitude come in very soon. And let's actually think about that. Let's prepare for that for a second, okay? Not financial advice, not a financial advisor, but whenever you got this massive reading in the MACD, this represented your pump. Your 10x move that you had in 5 weeks. You remember that? In April to May, right? The heydays. Glorious. Fantastic. Before you saw the meat of this move come in, you had a little appetizer, didn't you? Before you had the meat, you crossed above the zero, you consolidated, and then you rallied. Okay? There were signs. So, from here, we're likely not just going to blast through the roof. We'll move up. We'll do our little dance. Make a little love. And instead of getting down, we're going to get up tonight. Bow, 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 bow. It's going to be good. It's going to be really good. But again, that, if you think about it in the terms of the MACD, just like that, that might then imply that the price moves up. And then it consolidates. And then we break out. And that makes so much sense. It actually makes so much sense that that's exactly what we would do. Because we're not just going to move up straight to new all-time highs from here. You're probably going to move up to this area, somewhere around these highs, find some consolidation. Instead of rejecting like you did here, rejecting like you did here, rejecting like you did here, you'll do something different, which will promote different results. You'll give your MACD that chance to consolidate, and then Bob's your uncle. RSI looks great, stochastics look great. The MACD is not that great in the short term, like near term right here, but in the overall aspect, there is a shift happening. You can see it happening. I mean, it's easy to identify, right? Do I need to draw a line for you? It's you can see it. This is not a problem. That's for damn sure. Weekly time frame, looking at this here, you do have, I forget, do you have a technical? You do have a lower low. Your MACD on the weekly time frame, however, is fierce to the downside, but you're right at a point where you'd expect to bounce. Stochastics are reset, and the RSI, I mean, to be fair, you've bounced here a couple times before. It all makes sense to me, man. It's time to rally. From a low to a high, the actual low. You bounce right off the 0.5, nice. Whenever we do move higher, the expectation is that we will move all the way up to about 3 to 4.4 cents. And I've given this explanation I don't know how many freaking times over the months, but we're going to do it one more time. The reason why we expect this area is because we're anticipating a 5-legged impulsive count. Typically, in these 5-wave movements, the waves here, your even waves, wave 2 and wave 4, right? Because this is wave 1, this is wave 3, this is wave 5. But waves 2 and waves 4 are your consolidation phases. So wave 1 happened here, wave 2 happened here. This is your consolidation phase. We are right here right now in what we assume to be a 5-legged pattern all the way up, okay? The third leg of this 5-legged pattern, of this impulsive count, the third leg is typically the biggest leg, okay? Typically it's the biggest leg. Why are we assuming that we're going to go to this range? Because if the third leg, and just because it's typically the biggest doesn't mean it has to be, but I will say it's fairly uncommon for the third leg to be smaller than the first leg. It is fairly uncommon. From the low here or the low there, wherever the move starts, I'm going to just take it from here. You could put it at this low if you want to. You could put it below this low, whatever. However you cut it, it tops off here at the 1886 or 200 level, or if you do it how I would do it, which would be here, it's above there. What's the only rational target area? Because if this is going to be wave 3, it's going to be bigger than wave 1, which means it's likely going to be bigger than this. The only rational area is 3 to 4.5 cents. Maybe 6 to 7.7 cents. Maybe that happens. I mean, that's the cherry on top, and it could happen. We don't talk about it all the time because this move down, the statistical probability of hitting this zone, it basically is below 20%, I would say. Like, we have a very small chance of getting it, but it's not zero. It could happen still. Somebody was upset. They're like, man, I was really counting on 6 cents. And they were saying that they'd be happy with 3 cents, but there's like a psychological target that they were trying to achieve. You know, like here is $10,000, but here is $20,000. I've never had $20,000 in my life, and that's not what it is. I'm not referencing the exact numbers because I don't want to give anybody away. But all I'm trying to say here is don't count 6 to 7.7 cents out yet. Just because we don't talk about it on a regular basis doesn't mean that it's not possible. It is possible, but statistically speaking, the most probable outcome is 3 to 4.5 cents. Let's be real. Personally, I would say if you sold here, even if it goes up here, good job. Because it'll probably correct back down. You can buy back where you sold or lower. You know what I mean? Like, good job. You still did really good. From here, from the current price, a move that would take you all the way up to 3 cents to 4.5 cents, I mean, at a minimum, that's an 11x. 11x to 17x potential, you guys. It's coming. And maybe more. Maybe we're not bullish enough. Hit the like button, subscribe. Thank you all for being here. I'll see you on the next one, okay? Take care of yourselves. Bye-bye.